Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
I just know that's what we have right now is a macro event risk that needs to interrupt the bullish flows. We have the bullish flows right now. If you're looking for a level to short against, the Qs need to get back below 503 and the SPX needs to get back below 5750 and VIX needs to get back above 20. Your guardrails or a swag as it relates to when to get aggressively short the market again.
Yeah, and Richard is asking, well, how can the VIX be so low if we're looking to a future of more volatility? Well, remember, Richard, the VIX is very short-term oriented, not super short-term, right? There's a VIX 9-day for that, but the VIX is 30 days. So it's looking between, I think, forget what it is, 23 and 36 days or something like that. There's a window. So there's this wait, let's hurry up and wait thing, right, with VIX, which is in the short term, everybody's thinking there's going to be a little bit of a bid in here as a lot of people go, whoops, didn't expect that to happen last weekend. And so they need to reallocate. And then some of the other things that we've been talking about, which is many of those mechanical things, the vol targeting funds, they've reallocated a little bit, but they're basically done for now, except for some of the other ones that some of them look at 1 month volatility, which has been crushed, right? We've dropped all those big days from early April out of it. So they've reallocated somewhat. Now we've got the 3-month vol that's still hanging in there. That's the interesting thing about those products is they can't do anything. Even though we saw the market rallying and implied volatility, meaning option pricing coming down, that realized volatility was just staying up high because it was incorporating those massive days of movement from early April.
But outliers do revert with velocity, and we did get a nice reversal. I just wanted to share something real quick because I literally just posted this. You're talking about the big news, right, on Sunday that caused the gap up. Even before that, I love this quote here by Goldman. It says, if everyone is so bearish because they were tracking 11 weeks of negative bearish sentiment, which really was a record, right? People are fundamentally justified to be worried under this particular regime change, political, monetary, fiscal, everything. But the point is, Goldman said, systematic community has purchased 100 billion of global equities in the last 10 days. This was something I grabbed on Friday, by the way. And then Nomura chimed in, past 2 weeks have seen a grand total of 118 billion of buy flows across the leveraged ETF rebalancing, which you follow very closely, and the options dealer hedging flows. It was the largest 2-week buy impulse we have seen in at least the past year. So those are the mechanical flows that we started talking about a few weeks ago. Literally was the title of my May 5th trading room recap. It feels wrong to be long, and yet, and we talk about this, option flow and dealer positioning. Also, Spot Gamma gave us some really good insights that a lot of it was put covering. But the point is that they were coming in to buy, long story short. And it was really the price insensitive flow, mechanical buy. People then, like Tom Lee, go, oh, really, it was just oversold sentiment. No, really, it was mechanical buying. Look, McElligott again, Goldman again. The point is, it was very much a deal where we just needed also a positive peace deal, trade deal, tax cut deal, whatever, to make this rally really get going and focus on that 5750 as wall where hedges, and we talked about this, would start to go, oh, wait a minute, maybe we're going to go back to all-time highs. I better unwind this or roll it out or what have you. And that's what really triggered the short covering. And the macro trend trade, we're going to have stagflation and we're going to have a growth scare and we're going to have a recession risk, had to be unwound all at the same time. So that was a magnificent 200-point advance we basically did in a few days. But that doesn't mean they can't come back in. It's just the game that is played with market structure of who's actually buying. Now we need organic buyers, not gamma chasers. We do not need that. We need organic buyers.
You're right. It's all artificial. The fact that we got this news this past weekend pulls forward some of those positive vibes, because now you've got this deal that might have taken months. Then we're going to have, presumably by the time we see slowdown, we're probably going to see more pull forward because we got 90 more days now to stock up on items, on Chinese toilet paper or whatever people are buying. And so now we have the chance to even create more of a kind of almost a bit of a shell game in the economy where people are like, look, the economy, the numbers are really good, but they're only good because of what's happening out there. So by the time that the issue of a slowdown comes around, then maybe we are in a position where there are lots of deals have been done and Trump is becoming friends with everyone again, and stock market. So for now, Greg's wondering, you have the spot up, vol up, you have this sort of pushing down of downside, but you've pushed up call side again, right? They overdid it. They crushed that upper call skew, and now they pushed it up a little bit again lately because they got that wrong. We will see that get pushed down again, I think. If we persist up, we're going to see dealers get replenished. So all these cover call funds, everyone's going to come in and start hammering that vol. That's going to create a bit of a richer gamma profile, which all that means is that it should reduce volatility even more. So that is really, the VIX isn't looking at the move we had on Monday warrants a 30 VIX, but the VIX is saying, don't care. What I see is that this is a completely different situation, and there may be a bid to the market for some time. So people do not want to overpay for options at the moment. That doesn't mean as hedgers, we can't start looking to July,
Yes.
for example, as a way to start picking up some of those hedges that have come down in price. That is our opportunity. If you want to hold equities, you really should have some protection.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.